So primarily, as we know that banks and fintech NBFCs have been driving the digital transformation largely. It's a critical. It's becoming a business agenda, right? It's not no more an support function. It's become an enabler. So our panel discussion where that we want to touch that how the organization can leverage the unified compliance framework or integrated compliance framework for compliance assurance to continue to drive the digital transformation. For that, we have a wide experienced panelist in the room already we have there. So with that, I want to welcome everyone. Thank you, Sony sir, to be part of that. Sony sir is Senior General Manager and the CIO at the South Indian Bank and driving the digital and the technology agenda of the bank and also responsible to drive that compliance. We have Shankar Ramrakhani, who is a CISO, Group CISO for IFL Group. I think his job is getting tougher day by day. I know that, right? We have Harvinder Singh, again, CIO for Capital Small Finance Bank. And I think I'll talk about like NBFC, especially in the middle year and the small finance bank are facing a much bigger risk, challenges to ensure the compliance. And we have Arpit Ratan, the co-founder, Sciencey, working very closely with banks, fintechs, NBFCs into providing the red tech solutions to support them into the various compliance aspects. So with this, thank you everyone to be part of the panel and we'll get started. So Sony sir, I'll get started with you. Before getting into that specific pointer, maybe you can just talk about it, that how the entire the regulatory landscape has been changing in the context of the digital transformation which is taking place in the industry for the last couple of years. This is wide range open question. I'll take the feedback from everyone to start the sessions. So maybe Sony sir, we'll get started with you.
Yeah. Hey, thanks, Shashank, and thanks, fellow panelists, to be, it's an honor to be a part of this discussion. To keep it crisp, I think India has been blessed with a regulator who has been very proactive. Not just recently, I think RBI as a regulator on the BFSI segment has been very good in terms of, predicting and preventing risks in the ecosystem by coming out with guidelines and guardrails for basic banking over the past so many years. And it had reached a point where you used to have these yearly master directions, and then there used to be these updates that used to come in often, but not with the kind of frequency that we are observing nowadays. But because the system had evolved, the banking had evolved, and it was more in a traditional mode, that was actually sufficient for carrying out the day-to-day operations for the bank and maintaining and mitigating the risk. I think the big turnaround happened with the digital push, Shashank. I think you are hinting that. I would suggest, I would rather, if you go back, maybe payments was the first area where we started seeing the significant amount of changes coming in, primarily because of the enablement that cards first brought out because of the interoperability and the kind of risk that it started bringing out. Then obviously followed by UPI because of the scale and the kind of large host of services and value adds that got built on the UPI framework. You first had the cybersecurity framework come in, so because that was one of the biggest areas of concern for RBI, that all the regulated entities should be having a cybersecurity framework. So in 2016, you had that come in, and then there was a host of regulations that came in around cybercrime, cyber protection, and frauds, and all of that. You had the unique kind of unauthorized transaction rule that came in order to protect the customers from frauds, even if they were to fall prey to a crime. And then that slowly started expanding into so many other segments beyond cards, beyond UPI. The second thing that we saw was RBI was also trying to bring more controls around the ecosystem. So not just the regulated entities in that sense. You had the payment system operators also coming under the ambit of guidelines, which actually started becoming, everybody started coming under the larger ambit of RBI scrutiny. The PGPA guidelines that came in, etc., was a classic example. And even as we speak, there are further tweakings and modifications and guidelines. There was data residency that became a big issue because of the privacy bill that was getting discussed, and RBI was very careful in terms of ensuring that the first steps are all done right, and we are probably at the last stage of that becoming an act, and then we'll all have to actually ensure better controls. And then now the way I see the regulation move is because of, again, digital enablement. I think the second big segment that is coming up is the credit side of it. So there are a lot of guidelines that has come primarily on the master direction on credit card, which came up a couple of years back, 2022, which went through a lot of amendments also. As late as March 7th, there was a further amendment on the debit and credit card. Then there was the digital lending guideline that came in last year, which again brought out a lot of controls, a lot of standards and frameworks that RBI wanted. Then I think on the governance side, there is a host of things that RBI has now brought in, be it on the IT governance policy, IT outsourcing policy, and then on the non-IT outsourcing, the general outsourcing policy for banks. So I believe RBI, the regulator, is trying to actually expand its scope on the one side, as well as deepen in the domains which probably they believe matter the most at this point of time. And as you rightly mentioned, it's an evolving ecosystem, and all of us have to stay prepared and maybe a little proactive in terms of predicting what could be the next step, and then be protecting our banks and ensuring compliance. And I would rather like to see it more as adhering to benchmarks and standards rather than see it as a compliance requirement per se, because then that means that you're not only complying in letter but also in spirit.
Well, thank you, Sony sir. So with this, Shankar sir, I'll come to you because I'm told that CISO job is getting tougher day by day. That definitely. And Sony sir spoke about that how this has moved from payments to cards to the credit, right? So how do you see that? How the landscape each in terms of all the regulations is changing, and how entities are responding to the changes? What are the challenges?
Yeah. So I think Mr. Soni, highlighted, very valid points, right? RBI is a very proactive, entity, right? So they not only want banks, NBFC, HFC, to have a, just themselves to be secure, but the entire ecosystem have to be secured, right? And honestly, if you see, with the threat landscape, changing rapidly, right? And in fact, post-COVID, right? The number of digital frauds, cyber frauds, okay, lots of frauds happening towards the social media. Okay, the attackers are also becoming very, very smart, right? So I think the important element that we need to understand as an organization, as an entity, right? We had to be very proactive, right? We must not wait for any disaster to happen, right? And with the way so because I represent NBFC, HFC, also our capital market, all SEBI, RBI have realized that okay, stringent guidelines are the need of the hour, and it will not actually benefit them. It will actually benefit the organization who is implementing, right? We will never wait, for ransomware or, our data breach or malware infection or, any kind of big, large scale attack to happen for the organization, because these days the attacks are actually disruption in nature, right? A ransomware can actually disrupt your environment for multiple days. Organization takes time to, come back, okay, to the normal operations. That's why the plan is to be, more proactive in nature to ensure we implement those controls in spirit, right? Not only for the checklist perspective. That is why you will see that RBI audit is also becoming very tougher, day by day for organization to face. But it will actually help, the organization to be better prepared ahead for any disaster. So if you see all the recent regulations that Sony also said, right? The post RBI, cyber security framework came in 2016. After that, multiple regulation came around the payment area, around, vendor risk management, operational risk management. You have, master direction now, ITGRC for the NBFCs, housing, finance companies, banks to follow, right? So plan is to be a future ready. Okay. Plan is to be more proactive, implement the controls, test it regularly. It is tough for CISOs for sure, I'm sure for the CTOs, but organizations have understood, top management and board, all the regulation guidelines mandate us to report to board on cybersecurity program very regularly. They understand that this is not honestly a technology cost anymore. This is a business cost to bear. This is a compliance cost. And with the way the compliances are getting changed, we really have to invest. We need to make our people ready. A lot of awareness we need to bring, and it will actually benefit the organization in the longer run, right? You never want your organization to come in the bad books. Major cyber incident will impact your stocks, will impact your large customers, will impact your, the investment companies which are investing in you. Customer will lose, trust. Your brand reputation goes down. What bad incident actually, kills, all the elements of the growth of the organization. So I think regulators are doing really a fabulous work, okay, in creating these guidelines, also helping regulated entities to comply. And time has come for each and everyone to support. It is not only the CISO's or CTO responsibility to secure the organization. Everyone needs to come and give their hand, support the organization so that they can meet their objective. There was time, as Sony also suggested, that security was seen as a bottleneck, but now they have realized that security has to be within the DNA of the organization. We have got the required visibility to the board members, top managements since last many months now, and we have been regular interacting with them. So I think regulator is here to stay. They are here to secure the entire ecosystem. It is really needed for the economy of our country. Customer PI data, customer financial information, their health information is very, very critical, and we don't want to go that information into wrong hands, because you never know what could be the repercussion. And there is focus in the BFSI perspective, because there are a lot of frauds around the money aspect, right? You will see amounts are getting transferred to unwanted accounts. So people's monetary at a very monetary loss. So I think a very much important initiative from the regulator. It keeps us charged all the time, and also keeps us in demand. We need to understand that more and more tough regulation, there are more, and you're always be in demand, and people appreciate you, organization appreciate that it is not very easy to handle this domain. That's primarily my feedback.
Well, thank you, Sanjay. It was pretty interesting insight. So now, Harvinderji, coming to you, I think a small finance bank for them, digital is on a kind of level playing field, right? Because they help them to, because they can't expand very fast and on the branches, so digital becomes a good level playing field. You need to leverage the digital pretty big way. But you will always, as finance bank has been seen, and including the NBFCs, the middle layer kind of the NBFCs, always been a challenge on the technology resources, the skills challenges. So in this evolving landscape of the regulation, which Sony sir and Sagar has spoken about, how do you think small finance bank typically is been seen to respond to them?
Definitely, this is a particular area which is forming a kind of great challenge to the entities like small finance banks and NBFCs. Running the show means business needs, and with all constraints, having compliant and staying compliant rather with the diverse and evolving regulations is really a challenge as of now. So main pointers which I would like to highlight is as Mr. Shankar has covered the specific and crisp pointers onto the threats, not only from the internal, external, or every space, including cyber. Though regulatory bodies are trying to help the financial institutions to stay kind of in a strong preventive mode, but still implementing or abiding all the regulations has also become a challenge from the institutions like us. So main thing is the diversified kind of frameworks which are there, maybe from RBI, maybe from CSIT, other bodies, certain, all that. And the second challenge we feel is the interpretation of those guidelines or advisories which we are supposed to implement for certain preventive checks. And once we achieve to a particular stage, since the digital transformation and all this era is transforming, the regulatory space is also evolving at a good pace. So it is kind of an ongoing show. Doing compliance and staying compliant has become a kind of different topic nowadays. And apart from that, resource constraints, maybe in terms of skilled manpower and the compliant infrastructure and maybe certain other financial sources, even that is always been part, and that is still part while this particular subject. And apart from this, the risk management challenges are also there. Having technology in place to cover the risk is one thing, but having risk management capability is also one important factor, which I feel that until we are not mature at that level, the technology to manage this risk cannot be leveraged properly. So the combination is like that. It's not only technology, the data, the information should be analyzed properly with proper risk management capability, so that the technology investment can be appropriate and apt and leveraged properly. Apart from this, I feel the compliance culture is also one important factor across the organization, right from the brand channel to the regulatory offices, maybe ROs, everything. And while we talk about the technology implementation or adoption, it's not only that the technology is identified and has to be implemented. Adoption by every component of the organization becomes a significant challenge also in these days. And once we grow towards the technology footprint, the additional risk which Shankarji talked about, the potential frauds, the other financial crimes happening around this financial sector, which attract the reputational losses, other financial losses, that is also one of the significant challenge running in this. And in addition to this, all other external factors, maybe jurisdiction related, maybe geopolitical events, maybe assessment of the risk, appropriate assessment of the risk, everything. These are as a combination. I feel that we are having the challenges which we are facing as of now while abiding all the regulatory compliance requirements.
Thank you, Arvindaji. Now, Arpit, coming to you, you're driving fintech, RegTech solutions, right? And you work very closely with the CIOs, CTOs, and CISO, and not only them, but also the digital head and the product heads, right? So, what kind of the concern that you come across when they are driving their digital transformation agenda? How to use the technologies primarily to ensure that changing the compliance landscapes. So, what is your experience with them that you would like to share with the participants?
Uh, so one thing is very clear, right? I mean, I think everyone made that point. Harvinderji made that point that eventually there is so much of compliance change that is happening that uh, human resource to be able to match up is not practically possible. You may have all the best intentions in the world to meet all the guidance that is coming from regulators, but uh, there is a practical human challenge to it, right? So the only way to resolve that is, in my view, technology. And if we have seen across financial sector, whether that was KYC, underwriting, or now collections, large parts which involved uh, resources have been able to automate. So while decision making to a large extent, policy making to a large extent, always remains a call that is being made by the management or people in charge, but a lot of operational aspect of compliance, whether that's reporting, whether that's in terms of making sure that at each process transaction level a certain compliance has been met or not, and an audit trail to that compliance. Now that is something which will need to be automated. It will be a necessity to be automated because today the leaps and bounds that we have taken in our financial industry, and the scale at which we operate, and the pace at which we operate, you cannot roll that back. I don't think we are in a position to slow it down, right? So, and expectation from India is that we will just keep growing faster, and our payments will be faster, our financial transaction will be faster. So the only way to address, meet, and balance these two things is through technology, and we have done that before. One, I think, though I see a large challenge that everyone will face, is what was spoken earlier also, is that there's some dearth of domain understanding and domain knowledge, even within product and digital teams. So I think one aspect that needs to be addressed over a period of time, and that's across banks, that across fintechs, is that there, like for example, design skill, right? If you 2 3 years back when you spoke to product teams, UI UX was a new thing, and everyone got trained over a period of time to think design, right? Design thinking became a word. I think now that as we design new products, compliance will need to be as much part of product thinking as design, right? And I think that is one skill set which is missing within product and digital teams across banks and across fintechs, and that skill and domain needs to be brought in as we think about it. Because to what my co-panelists were saying, that this cannot be a CISO or a CTO or a compliance only responsibility. Uh, Eventually, the way design is no longer a just your design team responsibility. Everyone takes accountability for customer experience. I think to some extent, while policy etc. can be made at a CISO level, but every team who's designing products on ground, implementing them, will need to bring in compliance as a skill set within their teams, and I think that is the only way forward. And we've done that, right? That's happened, right? People who used to develop physical products have started developing digital products. Upskilling is something which banking and financial industry have done fantastically well over the years, and I believe with the kind of regulatory push that is there today, this will no longer be an option. I think anyone designing any product will need that kind of domain or skill.
No, thank you, Arpit. Very interesting point. So, sorry, sir, coming to you again. So, as a CIO, whenever the new regulation comes, how do you make your team ready to respond? And also making that business stakeholder also to understand, while at the same time not to deviate from the digital agenda that where bank is already running. And do you think that kind of the unified compliance framework kind of things will help you to respond better? So with that, want to pick up your thoughts. So is you're on mute.
I was just mentioning, I mean, looks like a tough one there. How do you do the balancing act as a, see, there are two things. One is, I think Arpit was mentioning about, and I believe Havinderji also mentioned, the fact that compliance as a culture is not confined to a particular unit. I think it should permeate to all levels within the organization. Now, one of the things that we do, and I'm sure everybody does, is to keep a little ahead of the curve in terms of what can be expected in the form of regulations. Now, I'll just give you an example of the payment related directions. If you look at the payment vision document that RBI generally comes out every X number of years, they keep giving you a guidance in terms of what are the key things, the key tenets that RBI really looks forward in terms of any kind of guideline. So generally they talk about 4 E's or 6S and so on and so forth. And typically that gives you an idea, if you really look at it, about the vision and the direction that RBI would like to take. Second is, if you really go through the whole descriptive part, honestly, it's very, very, very exhaustive in terms of what are the kind of things that RBI and the regulator is keen to launch in the next few years. I'll give you an example. OTP-less banking is something that's there in the payment vision document. And this is something that RBI and some of us are trying to see if we can work on sandboxes and try and see if there can be cheaper alternatives, more secure alternatives, which is more convenient. And at the same time, it ensures security to the end consumer. So I can, there are a lot of things that are coming out there, which then becomes a starting point for all of us to really look at what could possibly be coming so that we can start embedding it within the journeys without really making it too much rigid, but still having a plan. Second is, I think rather than leave it to the units, the best method that I have personally found successful is to have cross-functional teams. Product teams per se would be having a lot on their head in terms of the business line, the targets, the sales numbers, and the kind of features that they would like to have. There was a period where when we partner with fintechs, and Arpit probably would, may not agree fully, but a little bit of arbitrariness around certain guidelines, that the interpretation of certain guidelines was being used as a little bit of, let us say, to get a little bit of arbitrage when it comes to the models. That was being followed. But over a period of time, the way RBI has responded is coming strongly on certain cases where they believe that practice at an ecosystem level is not acceptable. And that's something that then immediately comes in the form of directions or guidelines, and all of us have to comply. So I don't think there is too much room anymore about arbitrage in terms of interpreting the regulations. So the only way out is to have cross-functional team who discuss, debate, and arrive at solutions which sit at the cusp of balancing between compliance and the end business. I think technology plays a very important role, as Arpit mentioned, to enable that balance to happen. So one is domain knowledge, one is about interpretations, have strong feedback coming in from the network. And when I say network, I'm talking about the ecosystem, the key leading players. I'm sure Digital Fifth also provides a lot of insights to all the members in terms of how the industry views it. Try and get feedback from regulators. Many a time when we have open conversations with regulators, there are a lot of insights that we draw, which probably doesn't come out very clearly in the circular. So these all gives you an idea about what is kosher with RBI, what is kosher with the regulator, and accordingly we try and put the guardrails to strike a balance. Sometimes I'm not saying all banks will get it right always, but definitely in most cases, we are able to hit the sweet spot between regulator and business growth. And the last thing is to review it very often. See, what was working fine when the scale was at this level probably is not going to be acceptable when the scale grows up to 10x and 20x and 30x. And that's where the whole new element of availability comes into play. I think, not just about what is written in the circulars and so on and so forth. Are you prepared to take in the capacity 10x, 20x, 30x is something that is now becoming very important. So then every stakeholder in the bank becomes a part of the regulation, directly or indirectly. That's how we manage as we go.
No, thank you, sir. Very interesting. So I think there is one question, Mark, to you, but I think it was very similar to what I asked, that on how the CIO you ensure expensive regulatory compulsion do not stifle innovation at South Indian Bank. So I think it is
constraints are the best way to feed innovation. That's one way to look at it.
No, thank you. So, sir, again, extending the same question, Sankar, that like typically, how do you make your team ready? And do you see that framework like a unified compliance or integrated compliance framework? Typically, CISOs typically drive the frameworks in the organizations to ensure that most of all the aspect of the regulations, including the ones that you may not be directly responsible, right? So how do you see that the unified compliance framework kind of a structure help you to respond to those regulations better?
Yeah. So, Shashank, primarily is that, there are set of standards that we follow, right? So in security, we always call it defense in depth approach. Okay. So you ensure that security is implemented at every layer of the organization, be it cloud layer, data layer, your server layer, perimeter layer, your people layer, as well as at the process layer, right? Because attacks can happen at any of the layers, right? The other important thing is that we do control harmonization, right? We map all the controls, comes from the regulatory, and primarily, if you see all the regulations, primarily they always talks about the enhancing the controls. An organization should ensure that they are not missing on the basics, right? So your all the systems should be adequately secure. You should do a risk assessment. You should do vulnerability assessment. You primarily, update, awareness, content of your organization. Do a lot of simulations. Okay, report regularly, status to the board. You have a proper exception management, ensuring high and critical risks are getting mitigated, manage a risk register. So primarily, if you see all of this, I think ISO 27001 is the standard, right? Which many organization follows because it gives you that structured approach, right? But I think in today's, current landscape, only standard or, process implementation or manual will not work. As Arpit said, right? We need to invest in technology. You need to invest in advanced security tools, right? Which can implement, which can protect the attacks in every layer of the organization. Apart from that, now I think time has come for all of us to move towards the zero trust journey. Okay, so organization had good defense in depth, but we need to verify, each and every connection, right? Coming to our network and then give the access. So I think zero trust is here to stay, and the other important aspect is that you need to continuously review your tools and strengthen it, right? You need to invest heavily in your cloud security. You need to ensure your controls are strengthened at the database level. Application security assessment, everything is revolved around the data and application. So application needs to adequately secured. You need to have proper web application firewalls, proper risk assessments. VAPT is done at the start of the application, reviewing of the secure code, and apart from that, having a proper calendar of each and everything. And the biggest thing is that test your resiliency, right? How much resilient you are. Should there be an attack in the organization, how quickly you can recover, right? And how good your backups are, so that in case if something goes wrong, okay, are you able to recover on time? Get your test RT and RPO and BCP element, okay, which is closely linked with the cyber now. Earlier days in BS25 and 999 and our old standard, right? We always need to, we were mentioning about there's a failure in people, process, or technology. Now we call it people, process, technology, location, and cyber. Even a one byte cyber incident can impact your continuity. So all of these things need to be tested. And more than that is that we have to correctly map the controls, get the gap assessment done, okay, internally or externally on any of the regulation. That should be the first start. Find out the gaps, prepare a project plan, implement it. Security cannot be done overnight. That's the truth that we need to understand. It will take months to implement bigger controls like micro segmentation, your CASBs, your zero trust. You can't implement today and tomorrow, right? So you need to have a proper buy-in from the management and have good set of compensatory controls which can reduce the risk. So that is the strategy most of the CISOs follow, and that will remain as it is. Yeah. Thank you, Shashank.
Thank you, Sagar. Now, Arvind, coming back, you mentioned about the technology as everybody echoes the same, right? But how do you see that technology can be weaved around that unified compliance structure where that it provides some level of assurance in the control implementation as well as the control compliance across multiple regulations, multiple standard expectations. So how do you see the technologies adopting that kind of the unified compliance approach build around the technology?
Yeah, I see. I think there are two parts to implementing unified compliance. One is data, and the second is rules. A combination of that is unified compliance framework, right? So, to a large extent, if you see that the first part and even the second part can only be solved by technology. Today, one large problem in all financial institutions is that different data and transactions sits in silos. So, which means that in order to make any decision based on data or run any rule, uh, you really don't have a single view of what's happening to a transaction or a customer at any given point of time. And our reporting, the way it's been structured, is also on a periodic basis. It's based on certain manual activity which leads to reports. So I think the number one problem to be solved in order to even think about a unified compliance framework is to have a much more integrated data, a much more real-time data. I think the RBI ask also on a compliance system is similar to say that can there be a real-time view to management on what is the compliance status within the organization, and not a quarter end view or not a month end view on compliance. If something is breaking today, you should know it today, right? So uh, for anyone, and I know it's a very very big ask, and for a bigger organization it's a huge ask, because today I think a lot of compliance you get to know, I mean, including a fintech and including a startup like even ours, you sometimes get to know about compliance breaches end of the year when someone submits a report. So the ask is, can you get to know them in almost real time? So that of course requires tons of automation. It requires a lot of data silos to be available to some kind of a rule engine, which can then eventually build on, or top on which you will build domain based rules, and which will raise flags in case of compliance breaches. Yeah, that's the overall ask, and I think that was part of the presentation. I think that Shashank, you were showing earlier before we started this panel. So I think both these layers require comprehensive investment in technology. I think the real question to and anyone running a compliance shop today, I mean, the real question to ask is that are we ready? And as Shankar also said, right? I mean, it's going to take time, so we have to, and it's not something which will get you customers, right? So as organizations, are we willing to invest into building this infrastructure, which is not directly ROI driven? There's no ROI that you can calculate the way you can do for, let's say, building onboarding system. So that is the real question to ask. Otherwise, all that unified compliance framework you are showing will require heavy technology investment, and it will require patience, because it will take time to reach there.
Thanks, Arvind. Thanks. So, Arvind, this is coming to you. As a small finance bank, we have understood about the challenges. So, how do you see that integrated compliance kind of an approach helps banks like you to respond better or prepare better for that? Will definitely require and a support from the technologies as well. So, what is your thought process?
I think this is a big question asked simply. So it has a vast scope to cover. But definitely, if this concept is maturely achieved, then it is going to benefit in different forms. First of all, what I feel is that the compliance processes will become little more normalized or streamlined kind of thing, since a established framework will take over certain part, and from the compliance standpoint view, things will be probably simplified as compared to today's situation. So once, because we have been through a situation where majority of the key IT persons from my team were engaged in kind of various audit sessions or compliance only. Sometimes it is C-side, sometimes it is certain, sometimes it is IS audit, and there are a number of audits. So definitely, if we achieve that unified or integrated kind of compliance management framework, it will help on to that. It will save on to the resource cost, time, and energy which we are spending on this. And moreover, if we are able to save some efficiency, means energy, then the risk assessment, or rather the comprehensive view which may be formed with this integrated information analytics, that will help us to be able to design more robust strategies to advance on to this compliance front, maybe to prevent certain legal issues or other things. And one other thing what I feel is that if we can go to that a mature level, it will clarify the accountability side of the things, which component is accountable for which type of compliance. It will enhance the transparency, and will be able to demonstrate the compliance status more effectively and kind of clearly to maybe to the regulatory bodies, maybe to the stakeholders, even to some extent customer sides, from the things which are related to directly indirectly compliance but are in the public domain. Apart from this, I think if we implement or achieve a matured integrated compliance framework, so it will increase the trust levels of the management, the partners, investors, all other, even up to some extent the customers also, since the frauds and all this happening, people at the customer side are not that mature to understand reasons, but they logically they feel that the threat onto the digital space. Going forward, once we are at this stage, I think if the audits and reporting part can be simplified and stabilized, it'll help us to save time, and that time and energy can be spent on innovating certain part, wherein as you said that the organization at our segment or size definitely have those kind of resource and energy challenges. So it will contribute at that front, wherein we may invest ourselves into more innovations, because the financial institutions have to be kind of proportionate to business and compliance, since business is also having same kind of importance or rather more. So I think it is nutshell, it will be helpful as a important component of any organization from the compliance standpoint.
Thank you, Arvind. Thank you. So I think we have covered the critical aspects, but just last piece, is there open questions? Anybody may like to respond with the DPDPA, Digital Personal Data Protection Bill, which is already there. So how do you see that in all this compliance structure that anyway you are driving, how you're getting yourself ready for the compliance expectation of the DPDPA? Maybe Sony sir, maybe you can
Yeah,
share.
I'll probably start off quickly. I think it's a big complex set of activities that all of us are anticipating to do. First of all, I think every bank would have gone through some form of label and classification of data. All of us are already doing that to a large extent. We have to be going by whatever we know right now in terms of what is available in the public domain. I'm almost sure that the banks would end up as a significant fiduciary, and therefore the kind of responsibilities that we are entailed to perform will be very high. But the good news is also that I think as an industry, banking was one industry which was actually tuned to this kind of strong security and privacy measures, even otherwise. So I don't think on that side, especially if I were to divide it into two segments, one within the perimeter of the bank, two outside the perimeter of the bank. I think the first part should be pretty clear. I think the major challenge will be the whole consent-driven architecture concept, which probably is going to, mean a lot of changes in technology in terms of managing the consent. And now that in all these guidelines, be it outsourcing guidelines, there is an aspect of customer consent even for sharing data with TSPs and all of that, which is kind of getting shaped up. So I think there will be a lot of work that we'll have to do on the consent management side, anonymization of data wherever possible, and the whole concept of how do you protect data at rest, in motion. All of that is going to become a big challenge. Not a challenge. I would see it as an investment that you need to make at some point of time. So you might as well bite the bullet early.
Thank you, sir. Maybe Shankar, you would like to add?
Yeah. So just to add what Sony said, it will change the way the business, will be performed, right? Because consent, everything you need to go back to the customer, take their concurrence. It's one of the biggest, game-changing compliances, which industry, will face, right? And it will not only impact BFSI, it will impact other industries also, right? So BFSI may be, since because they are used to, facing a lot of compliances, right? That might be some, breather, but other, if you see retail, e-commerce, maybe aviation or, other, manufacturing, they will really have a tough time, honestly. Yeah, but we will also have a tough time, but things would be very, very tough for all of us. But yeah, they will feel the heat more.
No, and as Sunisa said, that banks are expected to be designated as a significant data fiduciary.
Yeah,
I
yeah.
think responsibility maybe more. But I think with that, I think we have already crossed our time. But thank you everyone. Thank you everyone to taking out time and enlightening that audience with an insightful discussion. So thank you, Sunisa. Thank you, Arvindaji. Thank you, Shankar. And thank you, Arpit. Thank you.
Thank you, Shashank. Thank you, everybody.
Thank you.
Sony and
Thank you, everyone. Thank you.